Hello, this is Ernest Burley Jr., your certified financial planner professional, your chartered financial consultant, your NFLPA registered player financial advisor, your investment advisor representative. I hold the Series 6, 63, and 7 that allow me to offer securities products to clients across the country. Also, your author of two books on Money Management Easy as 1, 2, 3, and Money Management from Grade School to Grad School. These books are being used across the country in various states by various organizations to teach money management principles, financial planning principles, and also insurance concepts to children, youth, and adults. So I appreciate that. Thank you for those who are doing it now. And I ask the rest of you to buy the books and use them to help others, whether it be family, friends, church members, or what have you, to to get some financial planning principles and money management principles in place. I just had a church call me recently to order some. I'm just grateful for that. I had someone email me, wants me to come present to their family. So that's great. I appreciate it. I love the support, and I'm just here to help. All right. I'm also a licensed insurance agent with over 30 years experience in the industry, and I've been in business for over 25 years. Wow, my goodness. But I love it. Love every minute of it. Let's see. I have clients all across the country, from the north to the south, from the east to the west. So state lines don't restrict Burley Insurance and Financial Services, MWA, Ernest Burley Jr., from helping clients across the country. I focus mainly on wealth management, investing, and helping people out with IRAs, 401k plans, investment portfolios in one capacity or another, asset protection to protect what you've accumulated, and also asset growth to strategically try to grow what you have at your disposal. Financial planning, whether it be comprehensive financial planning or basic financial planning. So either one, basic, some people just need basic guidance and advice, and some people need a more comprehensive approach. So we offer both of those here at my firm. Insurance, all different types of insurance, whether it be life insurance, auto insurance, homeowners, condo renters, long-term care, disability, business policies, contractors, church policies, professional liability, E&O, the whole nine, investment properties, all different types of insurance I talk about and offer here at my firm. And also athlete management. On the NFL side, I'm an NFLPA registered player financial advisor. On the NBA side, I'm an NBPA certified player agent. So yeah, we kind of dabble in those arenas too, and we love to help out athletes however we can. Okay, so the purpose of this podcast is to educate, to enlighten, to empower you with clear, objective, unbiased information, so you can make some great decisions for yourself, for your family members, for your church members, for your coworkers, and all those who you are connected to. All right, that's what this is all about. Just to give you the information, and you have you're able to make an educated decision on things. Okay, so here today's podcast is titled "Guaranteed Life Insurance." Know these Guarantee issue life insurance. Know these three facts. All right. So, guarantee issue life insurance. Know three facts. These are three things I want you to know about those plans. So, just about everyone has seen or heard the commercial and the advertisement that says guaranteed life insurance. You can't be turned down. I mean, everyone's heard that. It sounds very attractive, very enticing, but you have to pay attention to the small print, right? The fine print. I've said this on a previous podcast, I think, or maybe it was during a speaking engagement. I don't know. I can't remember it. But freeze that TV when you see it and see that small writing at the bottom. Freeze it and look at that small print. I'm going to tell you what the small print says, but you just need to know a few things before you consider a plan like that. And I'll talk about whether you should consider something like that in the first place or not after I finish with these 3 points. Okay. So here we go. Point number one. These plans are usually accidental death policies, right? So they're accidental death for the first 2 or 3 years of the policy, depending on the carrier. Some companies, it's accidental death for the first 2 years of the policy. Some companies are for the first 3 years of the policy. Um, and a lot of people don't know that. I know every time I say this, when I go out and speak on different topics and I come across this topic or someone asks me about it, their eyes just pop wide open because they didn't know it was accidental death. Now, most people are going to die from some by natural causes or illness, sickness, or disease. That's how most people pass, not by accident. Now, a lot of people do pass because of accidents, but most people are going to pass by natural causes or some sickness, illness, or disease. And these policies don't pay for that during the first 2 or 3 years. Yes, that's something you need to know. That's in the fine print. Okay. And another little side note, okay, a little side note on this. Um, there's usually a clause in there like accidental death. If you don't die within the first 90 days or 180 days, then they no longer consider that an accidental death. They're not going to pay for it. So if you're still surviving after 181 days after that accident, it's not going to pay the face value of that policy if it's during that first 2 or 3 year period of time. Okay, so let's just be very, very cautious and very aware of, what a policy is saying it's going to do and what it's not going to do. Okay. So there you go. That's point number one. It's accidental death during the first 2 or 3 years of the policy. So if you pass during that first, now, if you pass during the first 2 or 3 years of the policy by accident, it's going to pay. If you survive the 2 or 3 years, then it will pay for anything. It will pay for natural causes, sickness, illness, disease, after that waiting period of 2 or 3 years. Because here's another side note. These companies aren't they're smart. They understand that you're probably looking to get this policy because you have some health conditions, some health concern or what have you. So they're not doing this because they're your friends and all. Oh yeah, we're chummy. We want to guarantee you a policy. This is a business strategy. So they figure, hey, this person has some health situation. They're coming to us for life insurance. So we're going to make them wait for 2 or 3 years before we give them that benefit of, 20,000 or 50,000 or whatever it is, 10,000, whatever it is, right? So yeah, just be aware of that. Okay, point number two. Let me get to point number two. Point number two, the premium normally sounds very attractive too, right? $9.99 gets you covered. Well, that's $9.99 per $1,000 of coverage. Doesn't sound so attractive then, right? When you start multiplying it out. So most basic policies, most people get 100,000. That's a basic amount of coverage. Now, of course, you can get way more coverage than that, but 100,000 like a basic amount of coverage. So let's just round this $9.99 to $10 because that's really, it's $10. Let's say $10 per 1,000. So if you have 100,000, 100 times 10 is what? $1,000. That's $1,000 a month for $100,000 policy. Now I know some people, hey Ernest, I just want a small policy. Okay, so $20,000 policy. That's $200 per month. Well, people are thinking, hey, I'm just paying for $10 a month for a pretty decent policy. No. So if you get a $20,000 policy, that's $200 a month. Say it's a $10,000 policy, that's $100 per month. So a lot of people are thinking, hey, I'm going to get me a nice benefit for $10 a month. Well, that's $1,000 of coverage, right? So it's per thousand. So that's a big one too. A big blow to people. They're like, oh no, I didn't know it was that. So that's point number two, and it dovetails into my third point. The third point is you get a small amount of coverage for a high premium. When you start looking at how that premium is, relative to the coverage you get, it's a small amount of coverage for a high premium. So those are the three things you really want to know about those policies, guarantee issue policies. And, choose a plan like this one only if you don't qualify for a regular traditional underwritten policy. So if you have some health condition, some health concern or what have you, that makes you ineligible or the rates are just, through the roof, then okay, I can understand considering something like this, but that's the last ditch option. This is not the first ditch option. And even if you have health conditions like high blood pressure, diabetes, cholesterol, and so many other things that you'll probably be able to get a better rate than these plans. It depends on the health condition. So I can't say, but it depends, right? So you'll be able to get a better policy more than likely with those health conditions, and it won't have that caveat on it saying, okay, it's only going to pay out this benefit if you pass by an accident within the first 2 or 3 years of the policy, versus a regular policy doesn't have that caveat in it. If anything happens to you the day after you pay that premium and they issue that policy, it pays the benefit, whether it's by accident, whether it's by sickness, illness, disease, or what have you. But those policies are underwritten, so they're going to check out your medical background and see on that. So that's all I have on that. Only choose those types of plans if you're ineligible otherwise. And I'll tell you, I've written those plans for clients before. I've written them before, when clients um, have a situation, or they are a parent or someone else they're trying to get coverage for, they're like, hey, I'm responsible. I'm financially responsible for mom or dad. It's going to be on me, so I need to get something in place. And I tell them, hey, these are the conditions of the policy. And I had one young lady, she's like, I really appreciate you telling me that, but I already knew it. I already kind of checked it out. I already knew about that, which I was surprised because most people don't know about it. But she appreciated the honesty of me telling her this is what this policy is. It's accidental death within the first 2 years or 3 years. I forgot which one. So yeah, what I'll do is I'll search all these different carriers. I'm appointed with dozens of life carriers. So if I can get you a normal underwritten policy for a good rate and or a decent rate with some good coverage, that's what I'm going to do. This is a last ditch option, but I do have this at my disposal also to help clients out if needed. Okay. That's it for today's podcast. I just want to be very clear on those guarantee issue life insurance policies. And that's it. Hey, if you guys have the time and you can remember to tune in, check me out on CTV at 4:30 on Tuesdays starting March the 26th. Okay. Um, CTV is Prince George's Community Television. It's a local television station here in Maryland. On Comcast, it's channel 76, and on Verizon, it's channel 42. If you can carve out the time, or set yourself a reminder, and come, check me out at 4:30 on Tuesdays starting March the 26th, which is coming up soon. I greatly appreciate it. Tell your friends, family members, church members, or what have you to tune in to. It's a segment on financial education, so I'd appreciate if you tuned in. And hey, if you have any ideas of what you want me to talk about, we could do that on the show. Okay. All right, so that's it for today's podcast. Hey, the recap is to just read the fine print and know these three facts before you consider this type of policy. And like I said before, this is the last option, not the first option, right? You want to make sure if you can be underwritten and get like a normal policy, that's what you do. All right. If you want to connect with me, very easy to do. You can either email me at ernest@ernestburleyjr.com. So that's my first name at my full name.com. Or you can reach out to me via the web, right? You can go online to my website, which is ernestburley.com or ernestburleyjr.com. I have a lot of great information on my website too. You can email me from there, or you can call my firm at 301-262-2600. Again, that's 301-262-2600. I ask that you forward my podcast to others. My podcast is on my YouTube channel. So my YouTube channel is Ernest Burley. Ernest Burley Jr. is just my name. And click around in there, subscribe, ask all of your friends and family members, church members, co-workers, family, friends across the country to subscribe and view the various videos in there and like the ones that you like, because I talk about a wide array of topics, everything from real estate to how to improve your credit score, whether you should buy or rent a home, whether you should lease a vehicle or purchase a vehicle, beneficiaries versus wills versus trust, just all type of stuff, entrepreneurship. I talk about a wide array of things on my YouTube channel, on various podcasts. So please check that out. I'm sure something in there will be of assistance to you and or your families or friends. So copy and paste that link to the YouTube channel and send it to others, your friends, your family members, church members, co-workers, what have you, all across the country. And I think that is it for today's podcast. Okay. I'm doing a new thing here, like I said before, and I'm making sure I show this instead of spending another 2 minutes in verbiage speaking. I'm showing this for a little while so y'all can see it very clearly. And there you go. That's my disclosure information for the podcast. All right. Hey, I thank y'all for listening in like you do every week. I ask that you forward it to others and ask them to do the same and like and subscribe to my channel. I really appreciate you. All right. Y'all take care. Until next time. Y'all take care. Y'all be safe out there. Okay.